My name is Mike Malwitz. I'm with Oracle EPM Sales Consulting, so I'm a sales consultant. And I'd just like to do a brief introduction of myself. Then we'll do an overview of what's available within the tax reporting cloud service. Then we'll move quickly into a demonstration. Okay, first a little bit about me. So I'm coming up on 30 years in the financial close and reporting space, including a year with a tax vendor. I then came back to Oracle. So I was in product management when we launched HFM, for example, in the early 2000s. Some of you might remember me from those interesting times. And then, moved on into the Oracle product management team, and then, joined the sales consulting team. And now I do education and demos around our cloud applications. So my email's in there. You can drop me an email if you like, and be happy to answer any further questions you might have. So when we think about the tax process, in particular, tax accounting and tax provisioning, it's typically part of the consolidations process. So after the ledger closes, a tax process kicks off where permanent and temporary difference adjustments are put in, tax reserves are set up, deferred tax asset accounts and liability accounts are adjusted. So it's typically a post-general ledger close activity. And in that case, tax applications tend to work like a subledger. They actually generate journal entries to adjust those tax accounts, under ASC 740, what used to be called FAS 109. And then you can see other activities occur. So month-end reconciliation processes occur, internal and external reporting, and tax would be involved with these as well. So for example, tax reconciliations may occur for your tax accounts where you have to prove to the auditors that they are complete and accurate. And then you may want to then, leverage the data that's in the tax solution to generate the tax footnote as part of a 10K or 10Q, or report on, planned tax, effective tax rate amounts, both for internal or external management purposes. So you can see tax kind of is pervasive across the entire close process. And it tends to be one of the things that holds up the close process. So most of our customers, discuss the fact that, the tax group takes its time to actually make those final adjustments, and you can't close the final set of corporate books until those tax adjustments are complete. So the way it works from a broader Oracle perspective, and this is unique in that, Oracle includes a very robust tax reporting solution as part of the ERP. So unlike some of our competitors, we actually do everything, under the Oracle umbrella. So for example, we pull data across automatically from the Oracle Cloud Ledger. We can, of course, integrate with any ledger. So we can pull, flat file data or direct integration data from other ERPs. But if you have Oracle Cloud Financials, it gets a little more efficient. We can also directly share the journal entries back to Oracle Cloud Financials with that approach through an integration adapter instead of passing a spreadsheet or a flat file, as with other solutions. Then there's also consolidation. So tax reporting, is going to integrate with the consolidation application. It can pass data back and forth from that perspective as well. We might pull in planning data into tax reporting to do our effective tax rate forecasting and adjust our interim forecasts if we're not at month end or year end, that is. And we might want to create, again, the footnote. So tax reporting might generate the tax footnote as part of the 10K or 10Q, which could, roll into an XBRL tagging as part of that process. And then you might want to bring in transfer pricing. So you can bring in transfer pricing adjustments directly from our profitability and cost management application into the tax reporting solution. And then you could leverage the effective tax rate forecasts for some of your strategic modeling, your long-range forecasting, based on your estimates of those effective tax rates down the road. And of course, tax reporting is part of the internal control framework. So you can see how, tax reporting solution, though it's strong by itself, is even stronger when it's included as part of a broader cloud ERP capability that spans all of these processes. And the nice thing is, you can access information across all of these processes in a consistent fashion. So the same kind of dashboards or mobile interface or alerts and watch lists or infolets or notifications, those are all common across the entire ERP, GL, and EPM activities. Okay? So when we look at the tax reporting cloud service, it contains 4 key components. It contains tax calculations, so out-of-the-box tax calculations for calculating your deferred tax assets and liabilities, for example. It includes a workflow and task management capability so that you can see where you are in the tax process, any particular tasks that are have gone late or are missing. You can identify those quickly, and you can have alerts about those various task processes. So customers use this for all sorts of things. They might put in, their tax audits or tax filings or, other tax activities, beyond typical provision and tax accounting activities in there. And then it includes several ways to get the data in. So we include a data integration component to pull GL data, the trial balance data, including the tax sensitized accounts, as well as a supplemental data capability to pull in data that's not available in the general ledger, but is needed for the tax process. So we'll cover both of those in the demo. And then we finally are able to report on the results. So we give you pre-built and easy to create dashboards, forms, and of course, SmartView access into the tax information. So when we look at the demo, we'll be looking at some of the pre-built tax calculations, supplemental data forms for things like uncertain tax positions, an ETR forecasting capability that pulls in a budget or a plan. We can also help with what we call country by country reporting, which is where we identify the legal entity and jurisdiction, tax situs information to determine whether a particular country is out of range with, standards or, is trending up or down, versus other metrics. So we'll talk a little bit about that. And then, we can integrate with consolidation applications, other ERPs, transfer pricing applications, as we had discussed a minute ago. And then it's got, of course, the workflow and the dashboards we discussed as well. So the way it works is, we've got our tax engine here in the middle. So this is actually an S-base calculation engine here, pre-built with rules and dimensions for the tax process. So it'll contain a pre-built set of accounts, pre-built set of tax dimensions. You set up your jurisdictions and your currencies, your scenarios. You set up your entity structure. And you also include your own, pre-tax accounts in there. And once that's set up, you simply load the data from the ERP using the data management component or REST APIs or file uploads, however you want to get the data in. And then at the end of the process, you can generate your financial reporting reports, narrative reports, management reports, or you can generate SmartView analyses, SmartView journal entries if you wish to take that approach. And then finally your tax footnote for 10Ks, 10Qs, or management reporting as well. So if we take that process in between and kind of blow it up a little bit, it looks like this. So again, we're loading our data from the ERP. It's running through a tax automation rule feature. Then down at the bottom here, we're generating our reports and our footnotes. What goes on in between are analysis and adjustment activities performed by the tax department. So here you see that little symbol. That means it's an automated report. So you'll get automated current provision, deferred tax roll forward reports, deferred tax, along with DTNR, which is another term for reserves. So you have all your reserves in there. And then finally, you'll get your statutory and consolidated effective tax rate reports out of the box and your tax account roll forward reports out of the box. But then these little green activities, these little green folks here, are making adjustments. So if things aren't exactly correct coming out of, the general ledger and flowing through the tax automation rules, the tax accountants have the opportunity to make adjustments, fully documented, fully auditable, with change control. So who did what and when, as well as an audit trail of the amounts having changed over time. And these could be adjustments to the current provision or the temporary differences, gross temporary differences, or you could take a book versus tax approach, which we'll discuss in the demo. You can input or set up your reserves here. You can also draw in your return data. So you can draw in return data from the prior year so that you can true up the current year on a return to accrual or return to provision basis. And then, of course, you're going to load up your national and regional tax rates, ahead of the process. You can subscribe to various services that, will deliver those national and regional tax rates, and you simply load them up with one click. Okay, so it's a data load, adjustment, and then reporting type of process here. And we'll kind of walk through that during the demonstration portion. So a little more architectural view is, you can pull data from any source, whether it's an ERP or general ledger. You can pull data from a data warehouse or any sort of relational source. You may have other different general ledgers or other different relational repositories, or you can even pull in an Excel file, a flat file, or an XML file. So the data mapping feature is one that should be familiar. It's the data management cloud application. So mapping and loading should be nothing new. And then you're going to load to various scenarios, actuals or forecasts or plans. You may bring in supplemental details across them, and then you get a workflow capability. This also delivers a drill through and write back capability. So if I'm looking at a particular form or report, it's very easy with 1 or 2 mouse clicks to drill back to the data source of that information. And then you get, of course, our standard web interface with the web forms, financial reports, Microsoft Office, narrative reporting, all work with this solution. So here's an example of one of our pre-built tax forms. This is what we call the tax count roll forward. And that's where, let me hide the controls here. You can see the current expense, deferred expense, the total provision amount on a movement basis. So this could be the source of the movements, for example, payments or refunds, return data coming in, audit settlements coming in, right? So these are equivalent to the movement dimension of data coming into the roll forward. And then this is the roll forward itself. And you can see here a classification as to current versus non-current. Here's my total deferred tax calculation. And then here's my payable calculation, which, as you see here, is typically related to adjustments being made either as payments or refunds coming in, which is going to, of course, adjust the liability for you. So this is a very important feature of the product. The other thing it does here is generate the journal entry. So the bottom line total here of each of these, so this line right here, is equivalent to the journal entry, which would be posted back into the ledger. So it would take the ending balance from the calculations in the application here, minus the ending balance per book. So these are your prior period balances coming from the general ledger, and it does a subtraction to get the final journal entry difference, which can then be posted back into the ledger, of course. So this is a key form, a key concept in the application that we'll cover a little deeper. I also mentioned the footnote, so we can generate the footnote directly from the tax application here. We can see a reconciliation, like in this case, of deferred tax assets across various types of changes in the asset. So, that amount broken down by what actually drove that amount. And then we can do the same on the liability side. And then we can get the kind of roll forward, opening balance, reclass income equity to the ending balance from an OCI perspective in this case. So all of this comes out of the box, with the application. We have special forms for deferred. So those tend to be the most complicated. And this is a gross deferred form showing the movements across the top here. For example, acquisitions and disposals or equity adjustments coming in. with the calculations down at the bottom, for the movements, and then, footnotes for those two. And then, special forms and reports for effective tax rate processing. So here we see what tax people call the rate reconciliation. The statutory rate, 21%, walked up to 25.41% with all the increases or decreases, made by the application and the calculations shown in the middle. So the same thing we see on the report, we can see the same thing here on the web form, right? So this is just a reflection of the data in the cube, and we can report on it on a web form, on a smart view sheet, or in a report. Okay, so here in the PowerPoint, you can click on these links if you download the PowerPoint and watch some videos. Watch a recorded customer success story. We're getting some great customer stories now with Tax Reporting Cloud Service. Okay, so let me switch over now to my demonstration, and I'm logged in as Denise here, and I can see information about my process. So here's an announcement about the tax process. I got 29 open tasks. 31 of them are late. That means, like, 2 or 3 of them were, late and now closed. I've got 1 task or activity due today. I've got 2 due for me in the next 7 days. And then I can see over here on the side various ways into the application. So here's a national tax provision, a regional one, which is sort of a state level approach. Could also be provinces if you're in Canada. A total tax view, so I can do reporting across various tax sources, indirect versus direct. So here's country by country reporting, which will span out into regional and jurisdictional views of country data. And then interim provision, that's my forecasting. Library brings it all together. Application gives me some application functions, tools, same sort of application functions. And then the Academy gives me all of my training videos in one place. And then tasks and operations here, that's data task tracking. So that's the closed calendar brought into the tax environment, and then the dashboards associated with that. Okay, so we'll kind of walk through each of these as we move through the demo today. But pretend I'm Denise, I'm logging in first thing in the morning, and I see an alert, things due today or in the next 7 days. So I can click once on those alerts, and I see a couple of problems that somebody wants me to check. So anyone can set up an alert, if they have access to the system and proper authority. So somebody's telling me to check the tax journal entry, and then somebody else is telling me to add a new tax difference into the rule set. So first I might want to check my tax journal entry here, see what that looks like. So I just click once on that alert, and it'll pop open, the content of the alert, as well as, the associated, parties who are responsible for resolving that alert here. Takes just a second. Internet's kind of slow. There it goes. So I can see details about this alert. I got 7 hours left on it, what the priority is, etc. So here's my description, and here's my response box when I'm done checking it out. So to check it out, I can click on the link up above here, to bring up, the actual content of the task itself. So this is where I can look at, if I'm trying to figure out, my payments here, it brings me right to the form that has the payments. And in my payable column, I could then input or upload, the total payments for this particular alert. Okay, and then I can just respond when I'm, done with that, and I'm off and running. Okay, So let's look at a different alert for a new tax difference. So this is where a new permanent difference is required. So somebody's telling me that they've got a new type of book versus tax difference that I need to add to the rules. Okay, so to do that, I click on my tax automation review, and you can see here the setup requirements for the tax reporting cloud service. So here's tax automation or return to accrual automation, exchange rates or tax rates. So these are the forms and activities that I would need to do on the front end to maintain the application. Okay, so I'm going to click on tax automation here, and I can see my global rules, my domicile rules, and my entity rules. Okay, so global rules are those that are universal for everything. Domicile rules can override the globals. Those can exist for a particular jurisdiction that I can select here in the page, or entity rules, same kind of thing. I can go down to an entity and set up particular overrides for the global rules. But in any case, this is kind of the magic of the application. So here I can set up a 50% non-deductible pull from the P&L, or a 100% reversal of total fixed assets with an add back of depreciation from a tax perspective as a replacement. So this would be a 100% non-deductible allowance for bad debts, et cetera, et cetera. So customers typically have between 50 and 100 of these book versus tax differences that you can set up in the application, and they're very straightforward to set up. I won't go into that at this time, but they're built for the tax department to set up your own tax automation rules. So no scripting, no special code. You simply set up those permanent and temporary differences in there. Okay, so there's a couple of alerts that also show, some of the underlying functionality of the application. Okay, so now let's kind of spin to the end of the process and look at some reports and dashboards. So here I can click on Infolets, and I can see, 732 million of pre-tax income before tax. I can spin that around and look at my combined consolidated ETR metric, and then I can look at it, at a regional level. I can spin this one around and expand it to look at country by country reporting, et cetera, et cetera. Now, the neat thing is I can have as many or as different of these infolets as I wish. They're very easy to create. Whatever are your key measures as a customer, you can set up these dashboards. And they're used typically on a mobile device. So these typically are not in PDFs or Word documents or PowerPoints. But if somebody wants a quick snapshot of what's going on, they might bring up a mobile device or an iPad or, of course, the desktop to understand what's going on with the tax process. Okay, so another approach is the report binder. So if I click on Tax Provision National here, click on Report Binder. So what we've done is set up a typical collection of financial reporting reports, here in the application that are fully drillable. Okay, so here's, my FY19 versus 18 view, my pre-tax book income, 658 mil versus 637. And then my provision calculation, which splits into two pieces, my current provision and my deferred portion. So this is all, this is all leading to my 26.26 effective tax rate. So these are the deferred adjustments, deferred related adjustments coming into the current effective tax rate here. Okay, so all of these are drillable. So if I wanted to drill on North America and evaluate this 69,878, I can click once on it and it jumps me to a sort of a work paper approach. Okay, so here's my 69,878 now at the bottom, and then I can expand that out to look at individual entities rolling up to that, 69,878, right? So here's 4.109 million of, this particular entity in US dollars that I might want to look at. So 30 million of pre-tax yielding 4.109 million of current tax liability, right? So I can click once on that and then see the deeper detail of that particular amount. Okay, so here I can expand into a view that shows me automated versus adjusted versus total. So you might remember a minute ago I said the data comes in and we apply our automated calculations to it. So my current tax on taxable income, 6.269 mil, and then 5,067 mil of automated tax provision based on loaded data. But then a person went in and made specific adjustments. So 2,000 there, 1.110 million there, et cetera, et cetera. So these are our manual adjustments. So it's a credit or a reduction of tax liability of 958,000. So my total tax liability for this entity is now 4.109 million instead of the 5,067. So we've reduced our liability through manual adjustments. Okay, this will become important when I show you the web form in a minute. Okay, so close that back down, and we'll close this back down. So that's one way to drill in. I can also drill on deferreds. So for example, if I want to know what's behind this 976,727 credit amount on deferreds, I can click once, and then I can see now how that lays in. So there's that same amount I was looking at a minute ago, and I can see where that came from in terms of, the current year total coming in there versus return to accrual from the prior year, audit settlements that I might have input, as part of a settlement process, other adjustments that impact on the deferred portion. Could have contingency amounts, automatic calculation of impact from change in tax rates, automatic calculation of the credit from the federal benefit of state perspective, tax reserves, et cetera, to get me to that number. Okay, so all of these are available for you right out of the box as a drill path, kind of a work paper support of the deferreds. Okay, and then I can also click on my consolidated ETR hyperlink. So this 172,886, if I click on that, then I can see down here at the bottom, 172,886. That's my total tax effect on a by entity basis, right? So this is each entity's tax liability, if you will, and then their percent of the consolidated ETR. So I could drill on any one of those, or I could drill on the total and see the rate rec for the entire company. So here I can see the walk down of the 21% up to the 26.26%. And if I'm interested in what's going on with, for example, total deductible tax from a state or a local perspective, this would give me that detail. And I could then spin this out as a, by entity view just as well. Okay, so at the end of the day, that's what we want, is a consolidated set of reports, consolidated set of work papers, leading to our tax provision, both current and deferred. Okay, so to get there, I'll show you how the tax package looks. Okay, so this tax package idea is one that's been around forever. It used to be spreadsheets where you'd collect up, these various tabs of data, but now it's in the cloud. So if I want to look at my current provision for a specific entity here, and I'm going to switch now to that same entity we were looking at in the reports. So for you accountants out there, you might remember these numbers: 4.109 mil, 5,067 mil with a 958 reduction. And this is how it looks in the application itself. So this is the automated column from a data load perspective, direct integration with a ledger or a flat file upload. Here's the adjustment column. These are the manual adjustments that were made. And then here's the total. So if I wanted to look at any of these, like for example, I have a permanent difference here for 1.308 million here which is 308,000 worth of meals and entertainment loaded from the ledger, but an additional $1 million adjustment that somebody put in. So then I can right click on that adjustment and I can look at the comments. Oh, okay, so it was booked as a conference expense, but we think, you know, most of that is entertainment. So we're gonna call that meals and entertainment, you know, to the tune of $1 million. And then we could also, you know, create a an attachment, like with an invoice, you know, for that particular adjustment. Okay, so our tax, our deductible amount goes down by that amount. And then here's my permanent and sorry, here's my temporary difference view here, same sort of thing, but in this case, these are temporary differences coming in. For example, the capitalized software or the total PP&E, and the rule we were looking at a minute ago regarding, you know, book versus tax depreciation, you know, would be identified here. Okay, so then you get into these other schedules. So for example, I might have net operating losses that I want to bring in as a credit, or I might have tax credits. Kind of works the same way. So here I've got an NOL from FY19 for 100,000, and this year I want to use 50,000 of it, and so I have another 50,000 remaining as a carry forward, which becomes a temporary difference in there. So I can see that, you know, $50,000 over here in the current provision. So I put it in the, you know, detailed schedule we were just looking at, and then I can come over here and look at my NOLs as a special account here. So that 50,000 came from that other schedule. So other schedules can feed the total summary schedules as we're seeing here. Okay, so that's how we do our current provision, you know, for a specific entity, for a specific jurisdiction. Temporary differences work very much the same way. You have really two different approaches that you can use. You can do your temps on a gross basis, which is what this represents. So I can see my total temps, you know, on a balance basis, on a movement basis, and then I can calculate my deferreds, you know, and all of my adjustments based on that. So this is a tax view, you know, applying the 21% statutory rate in this case. I can check my tax rates over here. So if I click on tax rates, I can see, you know, the 21% US rate, and then also the different regional rates, 6.5 or 8 or what have you, you know, down here at the state level. We can also accommodate a blended approach where we might want to just highlight, you know, our 4 key states that we do a lot of business in, but everything else becomes blended. You know, the other 46 states would be a blended approach to foot to the zero here. And this is how we apportion the income. So we put in the percentages and then automatically it'll get spun out and apportioned. So we'll cover the regional view in just a minute. Okay, so but I'm back here at the package level. We've done our deferreds. There's another approach to deferreds some customers like. This is popular in IFRS countries in particular, but it's kind of a growing requirement in the US and some industries as well. So in this case, we bring in our book basis of the assets, our tax basis of the assets, and then the application calculates the net difference. And then this becomes our basis of our deferred tax asset or liability, depending on the amount, right? So you can do this across various asset or liabilities types. So you could bring in intangibles that way, pensions, you know, whatever accounts contain your book versus tax differences, and calculate your deferreds in that fashion. So again, two different approaches for calculating deferreds, either on a gross basis, on gross temps, multiplied by the stat rate along with the adjustments, or a book versus tax basis, as we were showing a minute ago. Okay, so all of this rolls into the tax account roll forward, which again is, you know, current, deferred, total, classification, payable, and then over here we've got our equity adjustments, acquisitions, disposals, purchase accounting, etc., that foot to the total tax account roll forward. And then down below here, as we were discussing a second ago, you know, this is our ending balance per the application today. This is the ending balance per book for the current or prior period. And then this is the tax journal entry difference down below, which we can then strip off and create a journal entry for. So we see here our deferred expense would increase 119,214. Our current portion would reduce by 2.890 million, et cetera, across the bottom here. So a big focus is taxes payable. That's a big focus for our customers, watching the payable amount, because those are the accrued amounts minus the actual payments that were made. So here I can click on total payments, and I can see what was actually paid for the period. Scroll back up, 8.238 million. And if I click on my current tax payable work paper, then I can see where the 8.238 million came from. So there it is. It's a current year tax payment. So it could be for prior periods, or it could be for current periods. And then I can see the beginning and ending balances of the payable accounts for my tax reconciliation. Okay, so this is all included right out of the box for you. And you can load these details directly from your accounts payable subledger if you have that detail, for example. Okay, so then we look at regional taxes. So similar to the way that we just calculated our federal tax liabilities, we do the same at a regional level. Okay, so if I click on my current provision regional, and I look at a particular jurisdiction, like Alabama in this case, or I could pick California or Connecticut. So you saw those various rates that were in there a second ago. And if I pick Connecticut, for example, because that's where I live, I can see, okay, here's the apportionment. 15% of my income will be apportioned to Connecticut. And then I'm going to apply a 6.6% Connecticut current year tax rate. And then I'm going to see the actual amounts coming through based on the federal provision submission we were looking at a second ago. So this would be my Connecticut state tax liability, which would result in a federal benefit of state adjustment in the tax account roll forward, like we were just looking at. Yeah, and it's the same idea here for tax losses. Those can be state level, credits can be state level, et cetera, et cetera. So it kind of works the same way as federal. It just gives you the additional dimension, for jurisdictional tax rates and jurisdictional apportionment to execute those calculations. And you can see here you've got a tax account roll forward, an ETR analysis, and an RTA capability, for the state level tax submission. So let's go back and look at RTA from a federal perspective for just a minute. So RTA is return to accrual. And what we're doing here is, we're looking at an actual submission. We're looking at last year submission. So here in the demo, that's FY18. So I can pick FY18 now, and I can look at last year. Okay, so here's my return data coming in, and I'm comparing it to my period 12 of last year, and it's generating a set of differences that need to be booked in the current year. So this 1.201 million is, part of my current year tax provision, which I'll show you in a minute. So the data can come from any sort of, tax reporting application that you might have. So let me switch to a different entity here and show you how that might look. Okay, so I'm seeing now this 465,998 for non-deductible insurance coming in from the prior year tax submission. And I can click on my drill through here, and I can look at the actual data, that was loaded for the prior period. Okay, so there's that same number. And then I can open the source document here. And I can see, okay, this is data coming from, it looks like a corp tax format. So this is my prior year return corp tax data coming in, being loaded automatically, through a data management load process. And then again, it's going to calculate period 12 of FY18 versus the corp tax federal filing data for FY18 to give me the RTA difference for that period. Okay, so fully integrated via flat file, with the tax reporting software that might be used for filing of the 1120, for example. Okay, so then if I come back to the package and look at my current provision, now we're going to switch over to FY19 because we're rolling the RTA data forward into the current period. Okay, so then if I scroll down here, I can see the 1.201 number coming in. And if I expand that, then I can look at the fact that this was the additional current provision coming from the return to accrual form that I was just mentioning a minute ago, right? So that's the same number coming in. That's how we handle the return to accrual process. Okay, so I can't go into too much more detail today because I'm running low on time, but the bottom line is you get all sorts of great reports coming through here. So here's, my total tax by jurisdiction report, and I can also draw in indirect taxes, as you see here, for a total tax perspective. And similarly, I can do my country by country reporting here if I'm a multinational and I have OECD or US reporting requirements. So I can pull in all of my country level data and then do it by entity and then summarize it for external reporting and filing purposes in this case. So here's my 8-column country by country report by jurisdiction here, across related party revenue versus not. Here's my profit and loss, pre-tax, here's cash basis, here's my accrued amounts. So those are coming from the tax application. And then there's the things we measure against. So stated capital, accumulated earnings, number of employees, tangible fixed assets. And then we give you all sorts of analysis capabilities to make sure that, you're not out of whack with, those metrics, or you're not trending up or down, which may throw a flag to an auditor, for example. Okay. And then we do the same on the forecast. So I don't have enough time to go into all these details, but we can draw in the forecast data, do the same sort of calculations. Instead of scenario actual, we would pick the forecast one. Okay, and then it works quite nicely with SmartView. So any of the analysis we're looking at here can also be drawn into SmartView. And we can also, for example, look at our tax journal entry in SmartView. So, here's a SmartView sheet that I could leverage, to pull in the tax detail. Try again, but it looks like I'm out of time. So any questions in the chat here?
Yes, you have a few of them. The first one is, what are the ERP sources that can be integrated?
Yes. So with the integration agent, we can integrate to any ERP source. It's just that we're going to encrypt a flat file and send it up, into the cloud instead of providing a direct adapter integration like we would do with our own ERP cloud application. So the cloud ledger has direct adapters, but the other adapters would use the integration agent on premise for the direct connection. It would encrypt a flat file and then send it up into the cloud. That's a good question. Yeah.
Does it work with Workday Financials ERP?
Sure. Yeah, we can pull data from any source. But again, it's a creation of a flat file instead of a direct integration. So, we would pull down from Workday, the tax sensitized P&L and balance sheet, with the key accounts in there, create a flat file and then simply use the integration agent to upload it back into the cloud.
And then currently the last question is the Infolet you demoed leveraging the dashboard 2.0?
Yes. So the Infolets that I showed a second ago are the 1.0 dashboards, but those, the 2.0 are now available in the application. So, in the demo, I'm sure we'll see some 2.0 dashboards very shortly. in our demo here, but these are the 1.0 ones. Yeah.
That was currently the last question. We can give it a couple more minutes if you'd like for more, if any others come in, but.
Yeah, while we were talking, I was just bringing up a smart view sheet to analyze the tax detail. And, you know, I can start drilling in, you know, down to a particular permanent or temporary item here. Sorry about the network problems. And then I can drag and drop, you know, just like you would do with any other smart view sheet, you know, by entity or by jurisdiction, by region, etc. Okay, so I can, you know, keep that one and, oops. So I can keep that one and again here. Then drag up my geography and drill in that fashion. Okay, so customers really like that feature that you've got full smart view here across the tax dimensions, you know, in the application itself. All righty, great. Well, thanks for your participation and your questions, and look forward to talking with you further.
Thank you, Mike. Another one just came in. Is there a limit of how many info can be created?
A limit of how many, can you say again?
Info. I'm wondering if they mean infolet. Infolet, yes.
Oh, infolets. No, there is no limit. You can have as many infolets as you like. Yeah, we give you a directory structure, so you can store your infolets, you know, here in the directory, you know, keep them all kind of sorted. And again, they're very easy to build. So if I had another minute, I would, you know, show you how we would create a dashboard, either a 1.0 or a 2.0. And then literally it's as easy as just dragging and dropping, you know, to create those tax dashboards like that. And those can be published as infolets on the main Springboard, like we were discussing. All right, any other ones?
Not so far.
Okay, well, I think we can wrap up then. And again, thanks for your participation. Look forward to hearing from you.